reached an agreement or working on reaching an agreement? Whoever, it doesn't matter, whoever.
Go ahead.
Right. They have been sworn in. I don't know what's.
Oh, well,
necessary.
do we need to do that at this point? You think we need to do it?
May as well.
You want to do that? Okay. All right, well, let's go ahead and swear everybody in.
So anybody who's testifying in any appeal hearings today, we're going to come forward. If you haven't done this before, we swear all the witnesses in at once. I'll administer the oath. Please affirm the oath by stating I do and state your name in any of the microphones. Please raise your right hand. Do you swear or affirm the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help me God?
I do. Kenneth Carricker with Affiliated
do.
Tax.
I do. Sally Costley.
I do. Belinda Hazel, Assessor, Plaquemines Parish.
I do. Ellen Dunbar, the attorney for the assessor, Plaquemines Parish.
Great.
All righty, thank you. All right, if you just want
You want me to go first, Belinda? You want me to? Or?
Go right ahead.
Oh, all right, thank you. Mr. Chairman, we've been working on this one for quite some time, and we visited with the parish assessor this morning, and we have reached an agreement on settling this appeal. Both parties are in agreement for it, and I just don't have the final numbers, but we've discussed they're going to be, close enough that there's not going to be a problem. So I think once everybody's satisfied that this is what it should be and all, then we'll officially withdraw the appeal.
Okay.
And then the assessor can send in the change order, for that. So I'm sorry.
Belinda Hazel, Assessor, Plaquemines Parish. I'll confirm everything that Ken just said. He's practically a fixture in our office anyway. So we have come to an agreement on this one and
Okay.
ask that you continue.
All right, what we'll go ahead and do is I'll make a motion to just continue this indefinitely. And then once you've finalized everything, you can let us know, and then you can, officially withdraw the
Yes, sir.
withdraw the
We'll
appeal.
withdraw.
I just want to make sure we get it disposed of with the withdrawal, just because otherwise it's still hanging out there.
We'll hang
I
with it.
think, if the assessor's in agreement, we can probably have that done this week.
That's fine.
Because all I'm
That's
waiting
fine.
was just to get the numbers, and as
Right.
soon as I get them and say, okay, yeah, we're where we are, then I will just submit the
Okay.
withdrawal, so you should have it this week.
All right, that's fine. Well, I'll go ahead and make the motion that in the appeal of Wapiti Operating LLC versus the Plaquemine Parish Board of Review, docket number 18-22075-040, that we continue this appeal until further notice.
Second.
Commissioner Vercher?
Yes.
Commissioner Wagasback?
Yes.
Commissioner Wood?
Yes.
Commissioner West is absent. Chairman Shahardi?
Yes. All righty, well, thank you all very much.
Thank you very much.
Thank you.
Appreciate it.
Thank you.
Thank you.
All right, at this time, we'll now take up the appeal of Connecticut Midstream Energy LLC versus the Plaquemine Parish Board of Review, docket number 18-22075-001. It is the Tax Commission's policy to accept all documents into the record that were timely pre-filed in accordance with the Commission's rules and regulations. This will be done at the conclusion of all hearings on today's docket. Accordingly, there is no need to formally offer or introduce the exhibits into the record during your appeal hearing. However, if you intend to object to the submission of any of the opposing parties' exhibits, you must notify the Commission at the start of your appeal hearing. As a reminder, this is an administrative hearing, and as such, the rules of evidence are relaxed. The Commission is inclined to review and consider all evidence submitted and to accept such evidence into the record. All righty, the parties have been sworn in. This is a taxpayer appeal. Ms. Costley, I believe you're here on behalf of the property owner,
Yes,
so
I
I'll ask you to please go ahead and start. And I'd ask you to sit as close to the microphone as you
Okay.
can. Some of
So-
us up here are hard of hearing.
Okay. I'm Sally Costley here representing Connecticut Midstream Energy. on the 2018 property tax appeal. I submitted my appraisal, and my final conclusion of value is $990,000.
Okay.
I used the three approaches to value as required by USPAP, and basically the final conclusion, the obsolescence was calculated using the inutility formula.
And your final value request is what?
Well, my request on the appeal is $1,333,377.
Okay, and what are these other calculations then? This 990,000,
The income approach was, the final conclusion of value was 600,000. Excuse me, the income approach was 700,000. The sales approach or the market approach was 600,000, and the cost approach was 990,000.
okay, and how do we get to the 1,333,377?
Well, that was the value reported on the return, using the best available information at the time.
Okay. So it's not the 990,000 you're requesting, it's the
No, it's not the
1,333,000.
You know.
Okay. Do we have any questions? All right. Doesn't appear any questions at this point. Assessor Hazel, you want to, or
Before Assessor Hazel speaks, I just
Yes.
wanted to briefly point out, Connecticut's exhibits were somewhat, the numbering of them was somewhat confusing, but from what we could gather, the only exhibit provided to you all today that was actually provided to Assessor Hazel during the assessment period was the actual rendition, and the attachments with the rendition. The appraisal was not provided originally, and there are two affidavits from a Connecticut employee named Richard Sacco. We've never been provided those either. We have not had a chance to cross-examine him. I don't think he's here today. So we would object to the extent that there are exhibits that the commission is being asked to review and consider in conjunction with her obsolescence request that the assessor was not able to consider in making the original assessment.
what, so tell me again which exhibits those are?
I believe the numbering, and Ms. Costa might be able to help me, the numbering of the exhibits was confusing, so I'm having trouble actually identifying the number. I think Exhibit 1 was not provided, Exhibit 2 was not provided.
I can't write as fast as you talk.
Sorry.
All right, Exhibit 1, what else?
I believe Exhibit 1, Exhibit 2, Exhibit 3, Exhibit 4 is another affidavit. And then the actual rendition, which was provided, obviously, I don't see having an exhibit number. So we don't object to the actual rendition, but I don't see an exhibit number on it to be able to identify it for you.
And that is, what is that, the lat?
That's the
12?
lat form.
Lat form?
Yes, the lat form for the
Yeah.
pipeline, and it had some attachments with it, I believe. Actually, I think it's attached to Assessor Hazel's exhibit, so maybe
Okay.
we can identify it that way. Exhibit 2 to Assessor Hazel's exhibits would be the rendition, and that's the one exhibit that we do not object to.
Okay, so it's Exhibits 1, 2, 3, and 4, and the lat form, you said is Exhibit 2?
Lat form is Exhibit 2 to Assessor Hazel's rendition. It's also attached to Connecticut's exhibits, but it doesn't have a number.
Okay.
So if you want to identify it, it is attached as Exhibit 2 to Assessor Hazel's submission.
just to
Right.
clarify, the only information submitted by the taxpayer to the assessor was the LAT form with the attachments.
Yes.
Okay, thank you.
Was any of this information requested or any additional information requested at that time by the assessor?
No. No. Although there was an email exchange for a.
There
for a-
was an email exchange.
Yes.
You know,
That's
I
attached.
emailed
I think
the
I
income
asked.
approach to value. And she requested several of the income statements, and I sent them to her. And it seems like she was having trouble interpreting the income statements, so we exchanged emails back and forth.
And I remember requesting the throughput information.
No, I don't,
Yeah.
I gave them some throughput information. I emailed it to the office on September 24th, stating that the South Pass system has been running at approximately 5% of rated capacity.
And I would just respectfully point out that under Louisiana law, it's a self-reporting process, and renditions are due April 1st. And particularly, requests for economic obsolescence, the rules provide, have to be substantiated in writing by the taxpayer. So while the assessor does have the discretion to request the information, she's certainly not required to.
Go ahead.
Belinda Hazel, Assessor, Plaquemines Parish.
Pull your microphone a little bit closer, if you don't mind.
This is exactly the same as the issue we had last year. The assessor's office valued the well using the cost approach. We used the cost tables in the Tax Commission's rules and regs, depreciated for physical depreciation, and then we applied a 50% economic obsolescence factor, which we have in the past. What was submitted to us timely was a rendition that showed a 70% request for obsolescence, and we gave 50%.
So after you did the calculations based on the tables in the Tax Commission's rules and regs, you then applied a 50% obsolescence?
Prior, the same throughput, the same request for obsolescence, which was
Okay.
70%.
And no additional information from the
No
prior
additional
year?
information at that time. So there's
Okay.
some other information that Ellen
Since
alluded
then,
to
but
that.
not by
Yes,
April.
yes.
Okay.
In the past, I provided the income statement because they said they used the income shortfall to calculate obsolescence. One would think that if you're going to use the income shortfall, you're going to be using an income approach to value. The way the income shortfall works is it cuts in both directions, basically. If you're using the net book to calculate a rate of return, it's going to be way up there because the net book is the allocated purchase price. So their theory is because the rate of return is something like 35–40%, there's no obsolescence. But what you do is you just, it's a circular formula. You basically come back to an income approach. Income shortfall is basically another form of an income approach. It's used in valuing public utilities because your financials from your Form 2 are used, and the net book is the upper limit of value. So you're required to use PAP to consider obsolescence, so that the formula is basically circular. But when in a public utility, typically what happens when your income approach is higher than your net book, your ratepayers are going to are gonna intervene, protest, and you're gonna go either settle with them or go into a rate case and reduce the rates. The way they're applying the income shortfall is basically almost like a crapshoot. If your net book, if your rate of return is like, in Connecticut's case, is way up there, oh, there's no.
What's the rate of return? You said 35%?
I've got it in the appraisal. Should be under the income approach. I've got the, on the income approach, I've got the 2-year average being like 50%.
I just heard you throw the number 35% out there. I don't remember seeing that. I'm just,
Well, you know,
I see a
I'm
30,
just,
I see a 38.23%.
yeah, the last year, 2017 is 37%,
okay.
38%.
That's relevant.
So if you look at the income shortfall, you know, if you use the actual replacement costs less the physical depreciation of all 500 and some odd miles of the pipe, the replacement cost is like 110 million. And the rate of return on that would be 1.36%. So you're, and then the required rate of return, or the cap rate I used was the one that is used by the Louisiana Tax Commission. So I calculated an obsolescence using the replacement cost at 88% obsolescence. And then if I use the net book as a starting point, that's actually on the balance sheet of 3.9 million, the indicated rate of return for that year is like 38.23%. So I factored up by, you know, like 300%. And I come back to the income approach, or approximately. So if your net book looks more like 110 million, you know, you hit the obsolescence jackpot the way they're doing it.
Well, looking at, on this example you have here, and these are your numbers, is that correct?
Yes, sir.
I mean, it's not made-up number. I don't mean,
No,
it-
they're
I mean
off-
disrespectful. I mean, it's
they're
not
off
like,
of
like an
financials.
example, if you have, you know, it's not made-up numbers, it's the
No,
actual
it's
numbers.
actual
Okay.
numbers
All
off
right.
of financials.
Right, okay, I'm not,
Uh-huh.
I'm not making light of it, I'm just making sure it's
Right.
not just an example of something.
Uh-huh.
But I mean, using replacement cost new and then determining a rate of return with replacement cost new, I mean, the reality is that you wouldn't just look at replacement cost new, you'd be looking at applying some form of obsolescence directly to the replacement cost new. I mean, in other
Well-
words, the 110 million,
That's for all 500 and some odd miles of pipe
okay,
in the business unit.
but I mean, it's in its current state, it's not brand-new pipes.
No, it's not
It's-
brand new. I
it's-
just put it on the schedule, the replacement cost schedule, less
Right.
physical depreciation.
Right.
And basically what you're doing is you're using that number to allocate or distribute value up and down the line.
Yeah.
Similar
And
to
the
our-
110 million is the whole system?
the whole system.
Okay. And then and for discussion purposes, let's say between the two calculations we see here, let's say it's 13.2 million, just to pick a number in between, make it easy to talk. How much of that would be relevant to Plaquemine Parish?
I think about 5%.
How much, 5%?
5%. I calculated 5.25%.
So based on these calculations, you're saying that there's a value of approximately, what, $650,000?
Based on the income approach, $700,000.
You're using 700?
Yeah,
Okay.
with it, obsolescence quantified at 88%.
Okay.
Are all 6 systems, all 6 lines the same diameter and size?
No.
So how was that reallocated between the,
Well, what you do is you take all the pipe and, there's a schedule in there, all the pipe and
Right,
put it
right.
on a schedule,
I see it?
less the physical depreciation. And to come up with the 110 million.
Okay. And
It's
then,
similar to what Greg does on the distribution.
So, just to be clear, from your office, what exactly did you receive from the taxpayer as of April 1st?
We received Exhibit 4, which
Pardon
was
me?
the rendition, I think it's shown as Exhibit 4. It's your Exhibit 2. It's just our Exhibit 2.
I'm sorry.
For,
Our
Assessor's
Exhibit 2.
Exhibit 2.
Assessor Exhibit 2,
Right.
I don't think initially I included the income statement with the original rendition, but the office requested it after the fact, and I provided it before the April 1st deadline.
and then did you request other information from the taxpayer?
We got this rendition.
I'm sorry, you got-
We got a rendition that's under my Exhibit
Exhibit?
2. And it's the in-service date, the mileage, the cost per LTC schedule. It shows a 70% economic obsolescence rendition.
And you gave 50%?
And we gave 50%. We did exactly what we did last year when we got this exact same rendition, except for the prior year.
Okay.
We used the cost approach, which is the tables in the tax commission
So
rules
everything
and
you
regulations.
receive from Connecticut by April 1st is contained in your Exhibit 2?
Yes.
And so those income statements from 2016 to 2019,
We'll sit a little later, but
Those are part of it.
Okay.
Yes. I had income statements from prior year, and I requested the one for the
Thank you.
current year.
just wanted to make sure.
And what I look at on the income statements is there's a lot of expenses on them. There are expenses like entertainment, there are expenses like travel, there are expenses like subscriptions. There are things that I don't think apply to the property. I look at the revenue generated for the purpose only because I don't know how to do the income shortfall approach, and we did not do that. So I look at it just to see a trend. Is it stable? Is it going up? Is it going down? What's going on? And that's the information that I garner from it. And I looked at 3 years that were basically very similar, and so I said that kept me at what we did last year.
Yeah, I see it's kind of a stable trend within the last 3 years.
When you value an apartment building, you look for stabilized occupancy. I
Yep.
feel like Connecticut had purchased, they bought transmission lines that they're using as gathering lines, and so I guess I was thinking, I read that as them having overcome the beginning and now leveling off. So we left our assessment exactly the same calculation.
And last year you walked us through the reasoning behind the 50%. Can you walk us through that again real briefly?
The 50%, there's an engineer that occasionally does some consulting for us, and back when the property was purchased, he calculated a 50-point-some-odd% economic obsolescence that we used, and I believe we used the calculation that he came up with for a couple of years. I just rounded that off to 50% and decided that the lines are too big for what they're using them for. They acquired them, they're transmission lines, they're not being used for that. So there is going to be some throughput there no matter what, because it's not what, they weren't designed for Connecticut's business. And so if you look, I just look at all sorts of things. I looked at the throughput formula and it backed off from it somewhat, and you get to the 50%. I didn't prepare a long written statement today like I did last time because I felt like we were doing a repeat, and I was trying to be conscientious of your time.
Here's what I think I submitted this email exchange last year. That engineer says, as I reported earlier, the rate of return now being experienced by KME is computed against the booked property, plant, and equipment value from the sales price is quite good, well above any amount that would suggest economic obsolescence is warranted in Plaquemine Parish appraisal of the segments. So the analysis of economic obsolescence all boils down to whether or not you believe Connecticut's sales price should be used in any meaningful way. And then he goes on to say, because of all this uncertainty, I suggest we apply a 50% economic obsolescence and live to fight another day. So he's using the income shortfall.
That's an email exchange in connection with the 2017 tax year,
Yeah.
not the
2017
2018 tax year.
And an
Yeah.
explanation of why the sales price didn't jive with other sales prices. So was it arm's length?
Well, I
so we-
think the appraisal kind of clears up all the sales price question. And how the purchase price was allocated. That's part of the appraisal.
The assessor's office applied a 50% obsolescence to the calculation of value. I'm sorry, your office granted a 50% obsolescence.
We did, yes.
Based upon your calculations of replacement cost new.
Yes.
Okay, less depreciation plus an additional 50% obsolescence.
Looking at various
Ms.
things.
Costley, can we effectively say that you are requesting another 70% that you're requesting 70% obsolescence, or you haven't really gotten to a specific request for obsolescence, but rather
She rendered
are doing your
70%.
calculations separate?
I rendered 70% based on the best available information.
And that, based, I mean,
On-
bottom line, all of this, you're effectively asking for a 70% obsolescence?
Yeah, that's the 1,333,370.
And that 70% is, what was your starting number? In other words, you ended up with 1,333,377, which represents a 70% obsolescence.
It represents
Okay.
70% obsolescence.
So, I mean, we can take that number and, reverse it to get to the 100%. But what, do you know what that number is without me having to do math?
able to do it on a cell phone. Like the fair
Like
market.
4 million something?
4 million, you know,
I'm just trying to, you don't have to give me to the penny, so your starting number was somewhere in the $4 million range, would that be correct?
as far as replacement cost, less physical depreciation?
Yeah, in other words, you came out with a number of 4 million something, and then you took 70% obsolescence from that number to end up with 1,333,000. Is that correct?
What you're showing is 4,444,000.
Right, 590. And then times 30% would give
Yeah,
you the
30%,
1,333,000.
Right.
Okay.
And typically when you do an appraisal, I mean, you're gonna get the facts exactly right on the assessment day, you know? And I
Well-
notified them, you know, that it was running more like 5%. And in fact, the last time I talked to the engineer, we're looking at less than 2%. So the value doesn't need to be going up every year.
The value's
I mean-
higher because the cost schedule is higher.
I mean, it's heading towards being idle and ultimately abandoned in place.
All right, well,
Even with earnings of 2.3 million before depreciation?
Well, actually, the reason, well, that's the earnings on all 500 and some odd miles, all 6 systems. And the reason there was the bolt up in the earnings is because of the TC Offshore acquisition that was completed in the first quarter of 2016. And if you go back and look at the Form 2 for the TC Offshore, in the Form 2 on page 303, the earnings were typically around 10 million on that system, which is 100% offshore federal waters.
Okay.
You know, prior to that acquisition, you know, there
We've-
was actual losses.
We've handled
But you
Connecticut
can't
very
have- you
uniformly.
can't- Sorry.
I'm sorry, go right ahead.
You can't have, you can't have the offshore without the onshore, right? I mean, you've gotta
Well,
take the good with the bad to get your product to where it needs to go, correct?
right, but the TC Offshore acquisition included jurisdictional assets
Mm-hmm.
that are under the Connecticut Deepwater Offshore Express. And they're going, the TC Offshore is actually 2 parishes removed from Plaquemine. So it's not going through Plaquemine's parish.
Okay. Well, I
But
guess
as
we-
best I can figure, she uses the whole system to derive the value for our portion. Whereas we very uniformly are taking the miles of pipe, the ages, applying the schedules, and giving what we consider a healthy dose of obsolescence at 50%.
I mean, y'all both agree with the number of miles of pipe that run
Oh,
through
that's right.
Plaquemine Parish.
Mhm.
You both agree on the pipe sizes that run through Plaquemine Parish. Both agree with the schedules. So I don't see the argument that it's headed toward abandonment. you know, we're not there yet, and I don't
We're
see,
not there yet, but
I don't see
know.
how you use that argument today. We gotta discuss the
Well, I
obsolescence.
mean, I don't have any problem using an income approach.
When you were talking about your income statement and you were talking about the offshore, this says this is a consolidated income statement for Connecticut. Is that offshore included in Connecticut that you were speaking of that doesn't run through Plaquemines, or is that in another LLC or under another organization umbrella that's not included in these consolidated?
It says consolidated, but you know, what she's doing is she has.
And she's the CPA or the
So
accountant?
the CPA, she has a spreadsheet, what they call a spreadsheet, and then a worksheet, and then you have little tabs for, worksheets. And the whole thing is labeled consolidated, but it should say gathering revenues.
So this is just the Connecticut, it wouldn't,
It's just the Connecticut midstream.
okay.
Which consists of 6 systems, right?
So the $10 million that came in income from that acquisition is not reflected on here?
It's reflected on the 2016 income statement
Okay.
in
And-
revenues.
And Connecticut Midstream is made up of 6 systems, and correct me if I'm wrong, Sally, so one of which is in Plaquemines Parish. I think the largest mileage maybe is in Plaquemines Parish.
And do we have any more questions? No. Joe?
No.
Okay. Do you all want to close or summarize, if you'd like?
Sally, go ahead.
Ms. Costley?
Well, my position is I don't think it's reasonable to expect a small, basically mom and pop startup company to paying an extra $15,000 a year in taxes,
Okay.
when I don't have I can't calculate a value, well, using the 3 approaches of value. You know, all the obsolescence I quantified are, the best one was using the in-utility of 83%. And typically, 2 good appraisals shouldn't be more than 10% apart.
Okay. And bottom line is the debate is really over ultimately whether the 50% obsolescence that the assessor's office did is sufficient or not. In your case, you're saying that the 70% obsolescence is what should have been applied.
I mean, I would settle for that, yes. But,
Sure.
it just continues to go down.
Okay. All right.
I've basically settled on some numbers in the past that,
Okay.
a credible appraiser wouldn't attempt to defend them.
All right. Assessor?
We use the cost approach as put forth in the rules and regs. We take those figures, we depreciate for physical depreciation, and then we allowed and adjusted by 50% for economic obsolescence. We treat all the pipelines in that same manner. I don't know that we're giving economic obsolescence to any others, but we use the cost schedules and the cost approach.
All right. All right, well, thank you all very much. I'll make the motion that we take this appeal under advisement.
Second?
Commissioner Varcher,
Yes.
Commissioner Wagasback.
Yes.
Commissioner Wood,
Yes.
Commissioner West is absent, Chairman Shahardi.
Yes. Thank you all very much.
Thank
you.
Thank you. The other matters listed on the docket today for appeals have either been withdrawn or have been settled by the parties. The Tax Commission hereby accepts all pre-filed documents and oral testimony into the record as Taxpayer Exhibit 1 in Globo, Assessor Exhibit 1 in Globo, and Louisiana Tax Commission Staff Appraiser Exhibit 1 in Globo for each appeal hearing conducted today respectfully. All right, I believe there are no other matters to come before the commission at this time. I would accept the motion to adjourn.
So moved?
Second.
Commissioner Varcher,
Yes.
Commissioner Wagensback,
Yes.
Commissioner Wood,
Yes.
Commissioner West is absent, Chairman Shahardy.
Yes.